Hi, welcome to the Market Alert for Monday, the 9th of March 2020. So, panic purgatory, oil crashes at $27 a barrel, S&P futures lock limit down, and Treasury saw limit up amid historic liquidation. This is the overnight markets. This is not a Friday. This is, as it says here, the Sunday futures fiasco started off on the back foot. It has only gotten worse since. So, what they do, they have a certain percentage, I think it's 5%, that they allow the markets to move lower before they actually move in with the circuit breakers and halt trading, and then have to wait 15 minutes before they start again. And then if the market moves limit down again, they do exactly the same. I think they can do it 3 times before they halt trading for the whole of the session. So it's going to be an interesting day. And I've no doubts that the Fed cavalry will be there in the background, so will Mnuchin and the plunge protection team doing whatever they can to try and halt what's going on. But as I've said before, for years this market is seriously overvalued. It's been nothing but QE pumped, and of course now they've got an external crisis that they have no control over, i.e. the coronavirus, slowing down growth and slowing down the global economy. They are screwed. It's as simple as that, which is why you're seeing the move from stocks into bonds, which about as much as jumping out of the frying pan into the fire. No return, and we've seen exactly what happened with the yields recently as well, with the second inversion. Of course, the jump into the bonds will send the yields higher because there's a greater demand. So yeah, it's fascinating times, to say the least. So let's have a look at the markets. But before we go any further, the US have moved their clocks forward this last weekend. And for the next 2 weeks, they're going to be an hour ahead. So in order to match their trading hours, you need to change the primary times in the software from 14:30 to 13:30. I'm not going to adjust mine now, because that will alter the prices that you see here for Friday and the actual trading times. So make sure you do this, otherwise you're going to be an hour late to the party, and it's going to be an exciting party over the next few weeks and months. So on Friday, as we got to the session, the market rallied. It pulled back 76%. We can see this quite clearly. I will mark it up, but as I've said before, you start to see these retracements where they occur. The market then manages to move to the upside, pulls back. This is less than 76% retracement, but then we've got the 200 MA in the way. Market trades down to the 50. Market retraces back up again, and then double tops here above the 200 MA, but as soon as it closes below, we're back down, and then we get the plunge protection team coming in at the end of the session to bring the markets to the upside there. And then overnight, you can see the market drops. It gaps lower to start with by a huge amount. We go from the high down to the open. The market down 423 on the open there, and has continued to trade lower. So if we have a look and go down to the low, we have a 1,000 point drop there in the Dow. So the market has continued to move lower, you can see there, and we're heading back to the lows at the moment. It's gone a bit quieter, although prices are moving, so I'm assuming that, oh no, they are. I thought we were locked limit down and prices had stalled for a while. Let me just get you another chart while I think about it. Let me just grab this and then come back to here. And let's have a look at this. This is barchart.com. It is slightly delayed, but there you can see that the March futures, which will be expiring this Friday, thinking about it. So there'll be a lot of volatility on Friday alone with the quadruple witching, which is the expiration of the options, the indices contract, the stock futures, and the options futures. There's four now. It used to be triple witching, it's now quadruple witching. So here you can see the price is down on the overnight there on the daily chart is how it looks and what's going on so far. So back to Pinpoint Trader there, you can see that we've taken out the recent low. I'm just going to draw a few lines, and in fact I'm going to move to the weekly chart. It'll be a lot better. So there you can see price is moving lower. There's your dead cat bounce, where the market came up to the 200 MA, the 76% retracement. It closed back below, and now we're moving south. The market bounced on no buying, just profit taking on the downside, and that 50 basis point cut in rates. This is the weekly chart. We marked this up last week. If we break the 24,601, we go to the 200 MA. This is the next downside target, which takes you back to the beginning of January 2019, before the market managed to put on from the low of January 19 to the high of January, February. 8,000 points will be taken off if prices do continue down to this level here. Right, no news today. And let's just have a look at this before we move on. We've got Wednesday. There's nothing on Tuesday. We've got nothing really to talk about here. We've got a press conference on Thursday from the Criminal Lagarde. But other than that, there's not a lot to report news-wise. Implied volatility shot up on Friday because of uncertainty, back to these highs, just under 40% on the implied. As I said before, in the market alerts, we get a reprieve, then we get a second wave, and that's what we're seeing here. And the same there, you can see it visually as this continues to move to the upside. The yields have been updated, and here you can see them spiking to the upside. Expect these to move higher, as it said in the headline on Zero Hedge, that the bond market was also a limit up as well, so we can expect to see this move higher. I'm just going to get you another chart and here we go. So you can see how in times gone by, how the yields actually moved back to the upside as far as this is concerned. So we've got a long way to go for this to move back, and obviously the blue blocks, vertical blocks there, are recessions. So as we start to see this happen, you will see an acceleration in the bonds because the stock market drops and people move into the bond markets because the rate is guaranteed where there is uncertainty in the stock market. It's going to take a moment or two, but that's the bigger picture and how this actually works. Okay, that will do it for this one. We'll see what happens as the European markets open at 8 a.m. 7 a.m. the futures will open on the DAX, and it'll be interesting to see how that follows the US as well. Okay, that will do it for this one. Keep you posted if there is anything to report. Otherwise, as ever, thanks for watching. See you in the next one.